Well, the trend of big news weeks continues. The big hammer to drop this week was the CPI report that came out on Wednesday. The CPI, or Consumer Price Index, is perhaps the market's most looked upon report to judge how inflation is moving, which, as we discussed last week, is a huge driver of mortgage rates. If you missed that one and want more context, go back and check that one out. But the good news is that the report came in mostly aligned with expectations, if not slightly under expectations, which was great news for us because remember, the markets like predictability, and any news that inflation is going down is always good news for mortgage rates. Now, also this week was the PPI, or the Producer Price Index, which is basically the business version of the CPI report. Now, this inflation report also came in slightly under expectations, which was good news for us. Now, I will note that producer inflation doesn't weigh as heavily on investors as consumer inflation, but what happens to businesses usually gets passed on to consumers. So we can see this as a sign of good things to come. Now, speaking of that, what can we expect in the market going forward? Well, the next two CPI reports should be pretty big, and they're due in June and July, and all signs point to those being favorable reports. And to be honest with you, we probably would have had a more favorable report this month in May if not for an April spike in oil prices and a spike in used car prices as well. Now, all signs point to those two things not happening in the future, but what we do see is that shelter inflation, which is the biggest component of CPI, is finally catching up to the lag in reporting that it has. And so if the biggest component of CPI is going down, that will bring the whole number down with it. Now, I don't have a crystal ball, so take this with a huge grain of salt, but I would not be surprised if we are closing loans in the 5% interest rate range somewhat soon. Now, what this will do, of course, is also push more demand back into the market, which will drive up home values, not to the levels that we saw in 2021, but it will at the least give us a nice level of support. Now, this brings up another topic that I've been hearing about a lot lately, and that is appraisal gap coverage. Now, a lot of you are telling me that that is what is winning offers in the marketplace right now, but I want to kind of wave a little bit of a yellow flag of caution before we get too far into this. Now, in my opinion, it's hard for me to see that these will be as big of a factor as they were a couple of years ago. Now, one big reason is because honestly, I think people just have less money than they did, right? I mean, we can look at savings rates being extremely low. We can look at credit card balances being extremely high. And this may be anecdotal, but it seems like to me that a lot of buyers aren't coming to the table with a ton of equity to use, at least not yet. Another reason I'm cautious here is actually the state of the market. Now, I know appraisal gaps were super popular, but I'm always curious how many times they were actually used and how many times they were used up to the full amount that they were committed. Now, I say this because even in the insanity of that market, I actually didn't have an appraisal come in low. So in other words, it was easier for appraisers when we're having such a giant spike in values to make sense of higher sales prices. Now, in this market, we don't have that big spike in values, right? We have the recent data that we do, which is still an increase, but it's a very small increase. And so I think that the chances that a home gets overpriced, or at least gets bid up to being overpriced, are greater than they were a couple of years ago, simply because of where the market's at now. Now, I'm not saying that everyone who puts forth an appraisal gap in a contract is lying or that they're this awful thing. I'm not saying any of that. My point is that if you're on the listing side, I would actually ask for proof that that buyer can pay an appraisal gap, and I would follow up with the lender to make sure that if they're planning on pulling from their down payment, that they can still qualify for a lower down payment amount and a higher loan amount if the need arises. Now, if you're on the buy side and your client wants to do this, definitely check with their lender or get them over to me so we can help check that they are in fact covered in case they do need to execute on that appraisal gap coverage. Now, don't forget, you can subscribe to me here on YouTube in case my email newsletter gets lost for whatever reason. And you can also follow me on Instagram. I will put my handle in the description down below. As always, let me know how I can help you. Have a great weekend.